So, for example, when we get to a point where now in Florida, among many other states, typical homeowners insurance and typical property taxes have surged by more than 25% in a very, very short time frame. Most people's mortgage payments, and by most, I mean more than 50%, that's my definition. Most people's mortgage payments have grown substantially in the second half of the mortgage payment, which is the TI portion, the taxes and insurance. We got PI, TI, principal, interest, taxes, insurance, right? So most people are now looking at a very different circumstance when it comes to the tax and insurance portion of their payments than they previously were. Does that make sense? That being the case, a lot of people are falling behind because without even having a variable rate mortgage, without refinancing into a higher rate, without anything happening to the interest rate, I've seen people go from $2,200 a month payments to $2,900 a month payments overnight. Their income did not go up enough to make up for the additional $8,000 or $9,000 in costs that they now have to make up, that they now have to cover. If somebody's making $40,000 a year, $50,000 a year, something in that range, it's very hard to sustain an $8,000 annual surprise in your cost of living. Very hard. Most people cannot do that. There are perhaps some individuals that are hyper disciplined financially that can make that work, but most cannot. So it does lead to a state of elevated defaults, rather inevitably. We would love to think otherwise, but it's simply not reality. You know? So that's kind of the deal. We do also have quite a few other forms of defaults that have climbed.